very busy day on Wall Street. Indeed, joining us now to talk about everything that's happening, Dennis Poljack with the Poljack Group Wealth Management, to talk a little bit about the day that was on Wall Street. Dennis, thanks for joining us.
Thank you, Jonathan. I'm glad to be here.
So we saw the Dow go up 2.8% and the S&P 3.3%. Was this all China?
It was all China. It was all about de-escalation of the trade talks between the U.S. and China. And again, we have been in an environment where the trade talks have been the newsmaker for the markets in general.
So tomorrow, the April inflation numbers set to come out. We know that inflation definitely has been a big driver on Wall Street. Those numbers have steadily dropped in the last few months or so, but we're also dealing with a backlog of supplies because of this as well. We know that cargo ships are sitting out in the ocean waiting to get into U.S. ports. At what point could we possibly see an impact from this, from the supply chain issue, from the inflation reflected in these numbers on Wall Street?
So, Jonathan, those are all great points, and probably sooner rather than later. And there are mixed messages that we are seeing in the marketplace, and inflationary number is the major cause for concern. The market in general expect higher inflation to continue, and there is a possibility of markets going into recession and the economy going into recession as well. A mild recession compared to the previous recessions, but still a recession.
I was just going to say real quick, since these numbers will come out tomorrow, we're having a great day today. When we get these numbers tomorrow, could that completely do a 180 or how
well,
could this impact?
It could. Sometimes markets and the economy are not always in sync, and the economic reports obviously fuel the markets, but we could have probably a worse than expected report on the economy tomorrow.
So talking about China, what we have right now is a pause, not a fix. I remember the phrase irrational exuberance used a while back. Is that applicable here?
So the trade talks, no one likes them, the way they have been conducted in the public media and in the public space. So everyone wants the trade talks to be over. We want to focus on the policy. Probably the single most important thing for the markets and the economy in general for this year is the extension of the 2017 tax cuts and making those permanent. And we believe if that happens, that will fuel the markets grow. If it doesn't happen, we better watch out. So.
Oh, wow. Well, that's never a good sign. When should we expect those? When should we expect information about that to be available, or when should we start looking out for that?
Well, the Congress is working on it right now, trying to put the package together. The expectations are that the hope is that we might see something by the Memorial Day.
Okay. And final question. We've been hearing bear market, and today, have we changed our terminology? Are we saying bull again?
We have been positive on the markets. We like what we are seeing in certain segments of the economy. We're bullish. Of course, there's a concern about the inflation in potential recession, but we need to remember to focus on the earnings and the earnings growth of the corporations, and that's been the case that we have been seeing.
All right. Thank you so much, Dennis Poljack, Poljack Group. Thank you.
Thank you, Jeanette.
Thank you, Dennis.